To examine the process controls, we can use a control matrix. There are some principles behind a control matrix. If you look at an enterprise capturing data, it starts with events and transactions. It's captured by people and technology. There are people, systems, sets of rules that's followed, and there are enterprise processes that support these systems, and the processes are supported with a series of activities which comprise process, and they're conducted by people. Then there are technological systems that follow sets of rules. There are information processes to support these systems, and each process has a series of activities conducted by technology. The PCAOB is a control framework. A control matrix is a tool designed to evaluate and assess potential effectiveness of internal controls. In a given process, enterprise process and information process, there are control goals that must match with the control plans. When management and independent auditors perform this assessment about processes, they use a control matrix. But this control matrix is a template and it could be varied depending on the control framework of the enterprise. So there are enterprise or business processes, there are application processes. The enterprise processes are conducted by people on events and transactions. They require process controls. They follow enterprise rules. These processes applies to each functional area and can have specific processes in there. But there could be also processes that cut across more than one functional area. These functional specific areas could be finance, purchasing, sales, and personnel, where there are specific processes applied to these functional areas. Application processes are conducted by technology. They generate data from events and transactions. They require application controls and follow data rules. Each technology and software is embedded in them with specific processes. They're functionally generic. This application can cut across more than one functional area. If we take, for example, a business or enterprise process, there are control plans, and this control plan must meet with the expected control plans of the enterprise. They meet three goals: to become effective, efficient, and to secure the resources. So examples of enterprise process control plans are designing source documents to become effective and efficient, obtaining written approvals to become secure, pre-formatted screens, online prompting to accept, reject, and edit orders, populate input screen with master data, compare input data with master data, conduct program edit checks like identification, automate data entry, which are captured through OCR and RFID, enter data close to where data is originating, like online real time. So these are making the enterprise effective and efficient. Then there are also digital signatures to make the activities secure and retain authenticity of these activities captured. Control plans have three goals: to make data accurate, valid, and complete. There are certain control plans such as document design, pre-formatted screens, conducting limit checks, turnaround documents, populating input screen with master data, assist in making data accurate and valid. Digital signatures assist in making data accurate and valid. And obtaining written approvals assist in valid data. Conducting reconciliations, for example, on batch tuples with document counts assist in having valid data and complete data, and conducting sequence check assists in valid and complete data. Confirming acceptance assists in ensuring data are complete. So the basis for control matrix and how control plan works starts with policies and procedures, and these policies and procedures are designed by the senior leaders in the enterprise. And then there are control plans that are recommended and are implemented by the managers. There are operation processes and information processes. And these operation processes have three goals: to be efficient, for example, be timely and less costly; to be effective, to meet the vision and objectives of the enterprise; to secure assets and data. And then there are information processes which has three goals: to make data valid by updating master data, make data complete by updating master data, and making data accurate by updating master data. So where to install internal controls? Here are some examples. In the design, enterprise can have pre-formatted scripts when deciding the scripts. In inputting data, it can ensure that these input data are compared with master data. In data entry, enterprise can decide whether it's a manual entry or automated entry, and can conduct programmed or manual edit checks on data such as reconciliation. There could be prompting of information when data entry, edits, and rejecting is conducted. Approvers could be instructional by people or by formulas that is embedded in the technology, in the technological systems, by credit checks. Procedures to accept or reject data. It can identify to authenticate the customer, supplier with two-factor authentications, have signatures, digital signatures with SMS authentication or biometric comparison, asking for visual images of digital signatures, and these signatures are secured with sublocations with a public key when entering data by customer or supplier, and decrypt with a private key when the enterprise examines the information that was received The private key has to be protected and should be locked in a computer, and accessing the computer should be protected with authentications such as visual identification and passwords. And then data storage, with the data, this information are manual or digital, and with how often this master data are updated. There are flowcharts used as a basis to design control matrix. First is flowcharts show a relation between controls and processes. It can also allow to determine the nature and extent of controls to install on various processes. A flowchart can guide on the functional cycles, like sales cycles. Can also expand an enterprise process to show individual activities, like sales order process, sales delivery process, and sales receipt process, and then can expand into the activities that are conducted under each process. Flowchart can accommodate processes as they are in an enterprise and pinpoint some of the deficiencies in controls and some of the strengths in controls. The flowchart data flow diagram symbols are typically used in drawing flowcharts. For documents, manual key, punch cards, data flows, and connectors. Then for general purpose input-outputs, to show logical flows, to show data disk, start and end of a routine process, process or a system, manual process, an entity, and a decision. They have unique symbols that can be used in flowchart diagrams. If you take, for example, a flowchart diagram, there's a starting point, and then the data, the processes, and when there's manual key, the manual key is shown by a certain diagram, flowchart diagram, and then there's process activity, event data update shown by a rectangle, and then master data update is shown with a cylinder. Documents are shown in another diagram form. The process activity event data update, accepting for further processing. The manual activity or manual processes, and then process activity, manual key, they all have different flowchart symbols. So the nature and extent of process controls and application controls depend on three aspects: control environment, privacy controls, and the risk appetite of the enterprise. The control environment is about the level of integrity and ethics is displayed in the enterprise culture, to what extent those enterprise rules and data rules are followed, they are bent or not followed, the geographical location, the political aspects, cultural aspects, and religious aspects in the geography, firm demographics, the industry membership and the firm size can influence the control environment. Policy controls are about the duties segregation, the personnel policies, IT gender controls, and monitoring controls. Then the risk appetite is to what extent an enterprise avoid risk and on what they avoid risk, accept risk, share risk, and mitigate risk. So all these are interdependent and they inform each other, and therefore they should be looked in an integrated, in a holistic manner rather than individual